Hello traders, let's have a look where the market will go next week. I'm currently looking at CVD, so this is the green line you see over here. And you can see it's rising, it's making new higher highs. But you can see here, for example, we had this high around 43,400 with the CVD, which was around here. And now the CVD is much higher. But price is making lower highs. So CVD is increasing because there's a lot of people buying at market, but there's a lot of selling happening with limit orders, and that is preventing price from going up. So we're getting a bearish divergence. So it looks like we're going to roll over here and go lower. Now let's have a look at the charts. So what we still have here is the blue line. So this is this daily resistance, which is from the 3rd of August. That was the low we made over there. We did fall through, and then we found support at the S1 pivot, and this is a quarterly pivot. So we are coming up, and then we found resistance at the daily. And yeah, now it looks like we're coming down. Now what's below us? We still have this naked point of control over here. So this is from the 24th of January, and this is at 33,800. So it looks like we're going down there. And then, who knows, maybe if I hide the drawings, maybe we take out this low for a swing failure pattern, and then we go all the way up. Or a more bearish scenario. Oh, and here we have an alert. Atom, okay. So here we can come further down. So this is the area that I already discussed before, so please check out my previous videos about this one. So yeah, this would be a more bearish scenario. Now, there has been an article recently, let's see, when you look at atlantafed.org and then you search for GDP now. So they make an estimation of what the GDP will be in the coming months. And it looks really bad because in their latest estimate, the real GDP, so that's a GDP after inflation, would be 0.1% for the USA at the end of the first quarter. So that means we will go into recession starting in March. So that would be really bearish for the market. So yeah, if the markets start to price in such bad news, then yeah, we definitely can go lower. Let's see, does it mention somewhere when it was published? January 26th, which was on Wednesday. Okay, so but I don't really recall any bearish movements on Wednesday. So yeah, maybe they need to take some time to digest this and to see how they will react on this. So yeah, that would be my next level that I'm looking at. So for this one, I will wait what the price reaction is around those lows. If we do a swing, if we get a swing failure pattern, then we go further up. And I believe it was on the YouTube channel Market Makers, where they pointed out that there's this nice Fibonacci time from this low on the 22nd of June to the high on the 7th of September, and then to the low on the 21st of September. And then you have the 1.618 Fibonacci time, and that was exactly the low we had on the 24th of January. So that's quite an interesting one. So I'll leave it on the charts. Can be interesting for the future. In a more bullish scenario, if we go up from here, then it's a classic one. The next one is a naked point of control at 42,200. That would be also a retest of this green support line, which might become resistance. So that's definitely one to watch. But yeah, let's see. On the MACD, we're flipping green, so we might still have some momentum to the upside, but we can as well start to go down from here, so this is not so clear. But then there was also something with OBV. Was it maybe on the 4 hour? I thought I did see also somewhere some divergence. This is a lower high, so this is fine. The 1 hour. No, yeah, maybe here, this candle. So you make a lower high, but here on OBV, you make a higher high compared to this one. So that's a small divergence. So what am I looking at for the moment? That is a rising wedge. You can draw something like this, and then from here somehow, let's see, a bit higher. No, something like this. So it looks like this one will break and we go further to the downside. So let's see if there's a scalp that we can trade from. If we go short now, we're a bit too late, but nonetheless. Well, if we take out this naked point of control, the lowest one, then we have a risk to reward of 3.29. For the others, yeah, this is just 1. So yeah, maybe if you play around a bit with your stop loss, maybe if you take it to this last high, then you already increase to 1.7. Let's see, 0.75. Yeah. So yeah, that is something you can check for yourself, what your risk appetite is. So yeah, the pivots that we already discussed before. So there's still this monthly as well. Okay, yeah. So for the moment, it's unclear. To me, it looks like it wants to break to the downside, because if we look at the 4 hour MACD, then also here we start to exhaust. You can see we start to make the bars are getting less high, and it looks like we will turn red from here. So the question is, how deep will we go? To me, it's the fact that this is still a naked point of control looks juicy to me to take those ones out. And also with a lot of altcoins, I've seen that there's also this naked point of control, and that yeah, that is something interesting. Let's have a look Dash. So for Dash here we also had this crab pattern, which at the end failed to to hold, and we're coming down further. So also here quarterly pivots, and look where we bounced off from, exactly from this quarterly pivot. If we zoom out, well, it seems oh, I'm not on the daily. So from this whole uptrend, if you take your volume profile, so from the low in March of 2020 till the high in May of last year, then your point of control is actually at 71.35. So we're still quite above it, but it might still be an interesting one to watch. So quarterly pivot. Also, again, look, this naked point of control, which is still there. So also now we're down how much? 2.62%. So it also looks like we're going to roll over and come down again. So the question is will it be a swing failure pattern? Do we come further down, take out the point of control, and then who knows, maybe find support at the other S1? So yeah, that's also one to watch. So for the moment, I'm in no position on Dash. Ethereum, also same story here. Look, naked point of control is still there. So also just below, if we make a swing failure pattern, then we also take out the point of control from this whole range here from the 29th of March till the 3rd of August, because if you look on the monthly, then you can see actually we have here this range. Okay, we have a quite a big wick to the upside, and of course that shows on the daily as normal candles, but all this is just on a monthly time frame, is just a wick. So that's an interesting region to take out. On the weekly, we can have a look at the order block. So that's the last bearish candle we had before we reverse and turn bullish. So that's also something that acts as a magnet. So it's also just below the low we made. So yeah, also here it looks like we will come down. This is too juicy to leave on the table. So yeah, here we also might come down and retest those. Then at the bottom of this green box, so this order block, then we also have the S2 quarterly pivot. So, and then also monthly. Let's go back to the monthly, and then you can see it better. So here we found resistance at 1922. Then the next candle we were nicely above, and then we wicked down 3 times. We wicked 3 times, touched it 3 times this monthly, and we got rejection from it. So yeah, the question is, will it still happen a 4th time? Maybe not, but there are a lot of nice confluences in this zone. So yeah, also here it looks better if we push just a little bit more down. Ethereum, also look at this quarterly pivot, S1, touch, and we're going up. So also here, take into account, we might come down again to retest those lows. Also here, still naked point of control. XRP, Exactly the same story. Also here at this low, there's still this naked point of control, and it would still be in the Fibonacci compression that I'm looking at. We're not taking out this low. As long as we don't take that one out, then I still remain bullish with my take profit target at 2.31. So this is a 200% increase. So even here, stepping in here would even give a better trade, since your risk to reward will be much higher. Yeah, and a trade that I'm in for the moment is sand. This one is doing quite well. So here we have this bat pattern. Then we had here this zone of consolidation. So we tapped that one, and now we're going nicely up. But also here, yeah, there might be the risk that that we roll over and we come again to retest those naked point of controls. So yeah, for the moment it's difficult to find a good trade. So yeah, for the moment nothing yet. Yeah, we're gonna have to wait and see what next week will bring. But it, yeah, like I said, it looks like, look at this one, there's a 1, 2, 3, 4 naked point of controls which are there. So yeah, it might be that we take those out. Then maybe a quick look at the S&P 500 to see what we are having here. So here we have this daily. We did find resistance there, wick down, day after, wick down. And then last Friday we ended here. But who knows? Maybe we will find also resistance again somewhere. Look, there's also a naked point of control here. So we might take out this high from the 26th of January, quickly push up, take the liquidity over there, and then we could come down again to retest those lows. I'm still looking at 4,200. I have some orders over there. So yeah, that's the value area high from the COVID crash until the all-time high. So yeah, I did hear that sentiment on the stock market is really bearish. So that's actually positive for price action. So it means we will go up. So if we indeed go up and we have this this GDP number, which would be really bad, what we look at then would be if we take the high and then we go to the low and we look again at Fibonacci, the golden zone. And then we should look at the 4,600 region. So if I take away the pivots, maybe it's more clear. So, and let's see. Also here, this Fibonacci time. How was this one? This low from the 1st of October. Oh yeah, this is actually to determine the shark pattern. So you take Fibonacci time from the 1st of October till the high on the 22nd of November till the low on the 3rd of December. And then you take your one-to-one extension, and that's exactly where we made the low on the stock market. So that's a nice confluence. So yeah, the other ones, the other dates we're watching at, the next one would be the 8th of February. So who knows, maybe one day push down and then we come all the way up till this zone over here, the 4,600, and then maybe from there we will reject and then go further down. I'm going to remove this one because that's not so important anymore. Yeah, so also here, this is the zone that I will look at on Monday. So this naked point of control over here. During the Asian and European session, we might go up there. And then when you start to see a few hours before the stock market will open, you will see that we start to come down. And I always call this as a preparing for the USA market, because then they can step in and they can just short the market, because all the orders got filled here, and then for them it's take profit to the downside. So yeah, I think if we open bullish, this will be the one, and then we will have a wick again up and then coming down again. I think also that would make a lot of retail people bearish. They had their hopes here. Stock market went up. How much? 3%. Got smashed down again by more than 2%. Same here. You open nicely. You have this very nice run up. 2%. Got smashed down. Now we stay here, and then they might think, oh, okay, this is it. This is the bottom. Let's go long this time, just to only go a little bit higher and then get smashed again and find a new low. So yeah, but volume is nice here. So there's clearly a buying appetite in these lows. I'm fine with that, as long as they come a bit lower to fill my order. And then, yeah, the next one I will watch is definitely the 0.618. So the 4,600 region, that will definitely be a take profit one. Because look above, we still have here naked point of control. And here's the last one. And that's also a possibility that we go all the way up here. Fail to make a new all-time high, and that's it, we come down. Here's the bearish divergence I have seen on the OBV. Look at this. This was the all-time, or not even, no, the all-time high was, we did reach here with this volume, and look where we are now. So there's massive volume, but price is not taking out the all-time high, which it should have been based on the volume. So this is for now this is bearish. So unless we just pump here, pump and take out the all-time high, okay, yeah, then there's no divergence on the OBV. But for now, so much volume getting pumped in and then so little price action, this doesn't look good. So, but yeah, looking at the MACD, you know, it looks like we might go further up from here, but that doesn't mean we cannot have a wick to the downside again to take those lows and then go up. So yeah, that's also what I'm watching on the stock market. Just somehow take out those lows, go for a run, and then up to the 4,600 region. Because also with the stock market, I think that they will want to have some kind of controlled demolition, let's say, and they You know, they will let the stock market come up a bit and then slowly come down and then again up a bit and then again down. It won't be this blown off top and then coming down. I think that would be a better approach for the market makers and also for the politicians. Then they can just say, but it's a weakness in the market, blah 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 blah. So yeah, we will see how it will go next week. All right, okay, this was already a long one, so I'm gonna leave you all. See you in the next one. Bye bye.